dignitaries on and off the dais, on behalf of Western India Regional Council, we take an immense pleasure to introduce the guest for the evening, Shri Sumit Kumarji. Sumit is the IRS of batch 1994, and during his illustrious career, he has worked in Central Board of Indirect Taxes and Customs as an officer on special duty to member and chairman of CBIC. Also was a part of the Center of Excellence Drafting Committee, and amongst the field formation of CGST and customs, he has worked at various locations including Delhi, Kochi and Mumbai. Sir, I would like to bring to your notice that in India, we have 5 regional councils, and in that, the Western India Regional Council is the largest one. And in same tune, presently Sumit Kumarji is Principal Additional Director General, Directorate of Taxpayers Service, Mumbai Zonal Unit. And Mumbai Zonal Unit is one of the largest zone in the country under CBIC. So we have an immense pleasure to have you here, sir. And sir is the zone which is headed by sir is having the highest jurisdiction of 5 districts, namely Mumbai, Mumbai suburb, Thane, Palghar and Raigad with 21 commissioners. So would like to request all to give a round huge of applause to sir for sparing his time. Thank you, sir.
Thank you so much, Fenil Bhai. Requesting Sumit sir to please kindly address us.
A very good afternoon. I thank WIRC, the outgoing team of Mr. Rathi and the incoming team, all the office bearers and members who are present here for organizing this event and inviting me to come and address the members. I always mention that all tax payers require help and guidance. Now, on paper, the government makes the laws, but these days all the laws, both on our side and also on CBDT side, are basically it's self-administration. The taxpayers themselves follow the laws. And the first and probably the last authority they deal with is their consultant, CA, lawyer, whoever is helping them with the taxes. Now, the tax area is always complicated. So there will be some people who will require help with tax compliance. Then very few of them, out of probably less than 1%, would get into a tax dispute and would require help with tax litigation. And many big players, especially corporates, also require help with devising a tax strategy. So we have 3 distinct fields. One is tax strategy, as to understanding the tax environment, and then deciding the appropriate method on how to run your business. Then there would be tax compliance. In GST and even in customs, tax compliance is now totally dependent on the taxpayer. We have no role. We don't do any assessment. We have no role other than trying to make sure that through the use of data analytics and of course some amount of intelligence also, that whether people are following the law. 1% of people we get in touch either through tax audit or through scrutiny of returns in the ranges and through anti-evasion action. The same thing happens in customs. More than 90% of cargo goes through without any intervention. It's all filed by the importers and exporters, and very few people actually come in physical contact. So the equivalent of CAs and lawyers on that side, custom agents or other people, they assist the taxpayers there. So the role of members of this institute becomes very, very important. It is very important because you will finally decipher what the government is doing or has done, and you will be giving advice. For 99.9% of people, that will be the advice of the government. Whatever you say, they will believe. We tend to think that the budget speech or department circulars are important, but that is not important. What is important is what you tell them. Now, that is where we like to take the help of ICAI, and at least in my experience, ICAI has been doing very nice work of educating and dealing with the issues pertaining to their members' need for constant awareness of the ongoing changes. Now, DGTS, I head DGTS in Maharashtra and Goa. We have our mandate to deal with grievances. So if you have a grievance with CBIC, as a wing of CBIC, I deal with that. We have a mandate to deal with taxpayer education. So that is where we seek the help of all professional bodies, and more so a statutory body like ICAI, and also with the publicity or raising the awareness of changes, and also getting feedback on further changes or how exactly is the taxpayer reacting to any proposed or enacted change. Budget proposals right now are only proposals. So it is important to understand, because government, when it makes, it does get some feedback, but it may not get the feedback that matters to most taxpayers. So that is where these events become very important. We are also fortunate to have eminent practitioners like my good friend Mr. Rajiv Luthia here, and many other such members of this institute who study this, and then they come up with their views. Now, those views are not only important for you, it is also important for us, because his views will also determine your expectations, and your advice will then determine how the taxpayer reacts. So we would also like to hear what he has to say. Now, budget is very big, and these days, because of GST Council, all the changes don't happen only during budget. Customs, yes, customs, most of the changes would happen only once during budget. But GST Council meets all year round, and changes can keep on coming. The direction is very clear. Government wants simplification. Now, I was in GST drafting committee, and this is not the structure that we had ideally wanted. The best structure is a single rate structure. For a country like India, maybe 2 or 3 rates, not more than them. And also a very simple system whereby all issues should be online, which means that your activity with regards to compliance should be limited to your computer, to your desktop. Whether you want to register, whether you want to file a return, whether you want a refund, whether there is a hearing, everything should be available there. Because government does recognize the fact that your main work is to do your business, and for members of the institute to help those people carry out their tasks. It is not to become expert on tax matters. So the effort is to have a system which is simple, transparent, and wherever there is a problem, government does try and fix it. Now, the stakeholders are many. In GST, all the states are the stakeholders. So GST Council, you will have not only Government of India, CBIC and Government of India representing the views, but also all the other states. Similarly, in customs matters, we are one among maybe 30-35 departments. Commerce Ministry forms the trade policy, shipping, etc. The logistics hub, airlines are there. There would be, number of other players would be involved. So, to understand their needs, requirements. It is a constant 24/7 kind of activity, and that is where we are very happy that within very few days ICI has come up, and I was told that this particular document came up within a day, and yesterday CBDT event was conducted, and now this GST related event is being conducted. So I thank ICI, especially this WIRC, to on this prompt response, which will not only help you but will also give us a feedback, and we will continue to collaborate, and we hope that we get feedback. We are also discussing with the office bearers of WIRC to get more structured feedback from practicing members on certain issues, especially alternative dispute resolution issues and other issues. And the idea is to simplify and make the process to finish. If you have a dispute, it should be over in a few months or maximum a year. It should not linger on. As also to understand your concerns. Sometimes, when we are sitting on this side of the table, we don't understand your concerns. So, once you tell us your concern, all concerns are valid. All questions are valid. We can't say that, this is not a valid question. All questions are valid. So I look forward to hearing what our expert, Shri Luthia, would say today. And I look forward to getting feedback. And I again thank WIRC for organizing the event. Thank you, and Jai Hind.
Thank you so much, Sumit sir, for your kind words and motivating words, and I'm surely we will conduct some joint program. Already in this last 3 years, we have conducted more than 120 programs with GST department, with PF, ESIC authority, then CFO, then police commissioners. So we generally, every second or third day here, we are conducting a GST program. And some of them is with officers also, so surely we'll work together and we'll do this program, we'll continue these programs. We have a budget booklet, outside it is keeping. If anyone wants to buy it, you can buy it. It's just, I think, 50 rupees. It's a cost basis pay, we have that. I recognize the presence of RCM-elect Vijendra Jain. Moving further, requesting to our RCM Saurabh Ajmera for vote of thanks, and then we'll move for next session.
Thank you, Sweta ma'am. And sir, before going to vote of thanks, Sumit sir, I want to highlight that in last year, we have conducted training for more than 1,500 officers with all the department, including ATS, cybercrime, and all other stakeholders with the government. So we are keen to have more engagement with all the stakeholders. And friends, I want to appraise that yesterday we had you can say budget discussion with more than 1,000 chartered accountants, and that photograph I shared with one of the regulators, senior person, and he said, and he was very shocked that on first we had a budget, and on third we have completed budget discussion with the presence of more than 1,000 chartered accountant. And he said that that is why we are calling chartered accountant as a economic soldier, or you can say the flag holder of the economy. So this is the appraisal for all of us. Let's have a big round of applause for each one of you for taking such participation at WIRC. And WIRC is always available to provide all the real-time update to all our members on a promptly basis. With this, I like to have vote of thanks for Sumit sir. Sir, thank you so much for sparing your valuable time on such a short notice and highlighting some point related to the GST and the engagement. Let's have a big round of applause for Sumit sir. On behalf of WIRC, I like to extend a big thank you for your availability over here. And friends, for budget, I can say this is the first bold statement of this tenure of the government where we have more than our expectations. So probably we will be getting more work for our profession, as we all know that there are some major changes which is also planned in this month only, and we'll have a great future ahead. Thank you so much. Thank you, everyone. Now I request Sanjay Nikam sir to introduce our next faculty, so Rajiv Luthia sir, for the discussion on the updates of GST.
Thank you very much, Sauravji. Good evening, one and all. As you heard that yesterday only we had a biggest event on direct tax budget, budget 2025, and we decided that we'll have a special session on GST, and today we are gathered here to hear from the learned faculties. So friends, Rajiv Luthia ji is not only a faculty but a go-to person for WRC. When we were deciding about the coming up with the booklet on budget, at 11th hour we approached you, you accepted the request and you contributed in better way. Today also on 11th hour we approached you, you came here all the way to share your expertise. So thank you very much, sir, for sparing your time for the fraternity. Friends, as such, Rajiv Luthia sir doesn't need any introduction. Every one of us must have heard him once in a life at least. But for better understanding and to complete the formality, I'll introduce him. Rajiv Luthia sir is a chartered accountant by profession, and he cleared the chartered accountancy in 1987. He DISA qualified and LLB qualified also. He's practicing as a chartered accountant since 1987 as a specialist, specialized in field of service tax and GST. Currently, senior partner in SML and company LLP chartered accountants, heading GST division. Delivered talks at seminars organized by various forums like WRC, ICAI, BCA, CTC, AIFTP, GSTPM on topics of service tax and GST. Contributor to columns of GST law updates in monthly newsletter published by WRC of ICAI since last 2 decades. Contributor to column of service tax law updates in monthly journals published by CTC since 2017. Authorized various publications for ICAI Delhi, WRC of ICAI, BCA on topics of service tax and GST. Was co-opted member of Indirect Tax Committee of Central Council of ICAI. Was special invitee and convener for IDT Committee GST Group of ICAI. Was chairman of Indirect Tax Committee of CTC for year 2009, 10 and 2015. Presently advisor to Indirect Tax Committee of Chamber of Tax Consultant. Special invitee of IDT of Committee of ICAI for 24-25 also. I'll request all of you to welcome sir with big round of applause. Sir, dice is yours. Take the charge.
Good evening, everybody. I'll request if you can switch off these lights. Respected guest of honor for the day, Shri Sumit Kumar sir, for our keynote address. All the regional council members, seniors and friends. Let me thanks to our institute for having given me an opportunity time and again. And during the introduction, etc., repeatedly they were told at a very short notice. I think what institute has done for us is nothing in front. What we are giving is just a peanut. I am just a small drop in the ocean. It's only because of our institute we are standing here in front of you. and it is our time to give it back to the institute whatever we can do it, and it's we are fortunate that we have been given opportunity. So I am really thankful to the institute for that front. Well friends, on a GST front, as our guest of honor has told that GST, there is nothing, everything doesn't come in budget. Customs may, yes, I do agree. You see GST is around 92 or 92nd month of GST we are into, and we are almost 56 council meetings. So if you can see, on an average every 1.5 month we have council meeting happening. Of course the pace was very high in the initial days when the law was getting molded, and now after it is being settling down, the duration has gone up. But virtually every 1.5 month you have something or other comes up by way of a notification or circulars by way of clarification, sometimes press notes, etc. And that's how the budget contains very limited clauses to that extent. I recollect when we used to do our articles and qualified somewhere in 90s, where the budget meeting of our institute used to happen in Brabant Stadium, and more than 5,000 were the participants those days, and the chartered accountants are more than fourfold as compared to what those days when Nani Palkiwala used to attend, as compared, because of the amendments were in 3 digits. Today if you have to count in the entire finance bill, there are 14 amendments for GST, totally 14 in all, and of which 5 or 6 are only, I mean to say, that doesn't require too much of the explanation, but then few of them are far-reaching impact. And if you really look at the trend, the way the amendments have been proposed, by and large, if you see the things happening during entire year, for which if any judgment comes delivered in the writs, nowadays we don't have tribunal as on today, but decision comes from high courts and supreme courts on any issues, or any clarification being sought by the industry. Based on that, CBIC gives the clarification time and again. More or less the amendment is always connected to that. So based on that, the number of amendments are less. Within the time allotted, I'll try my best to take you through. Of course, the publication which is come out, which contain entire all the 14 amendments in the detail. On the budget front, I don't understand economy too much. GST itself take hell lot of a time, but some of the statements that you can read it. Opposition's job is always to criticize. But what I mean to say, leave apart all this politics and all. In my 40 years of practice, for the first time I have seen the kind of relief which is coming up for a common man at the income tax front. Lot relief has come. Of course, there may be many other provisions. On the GST fund in the 7 years, some of the plus side is everything, that is what our guest of honor, Mr. Sumit Kumar says, everything is on tip of finger. You sit in your office, your returns, etc. have been filed. Lot of things are happening. We have opportunity of faceless hearings or etc. Virtual hearing rather is coming up. So that is saving lot of your time, efforts and energies. And I am sure in the time to come, things will be more and more simple on the GST front. The some of the good point and the cheers and tears are always there in a budget. First is input service distributor. There was some corrections required in the definition, which was missed out by the government while amending the definition, and which has been taken care of in this finance bill. The IGST part, the tax paid under IGST, there was no provision for distribution. The chain was broken, and that is been rectified. Here are only the points I am giving. The detailed explanation will be there in the subsequent slide. Then about the taxability of voucher, because in the last 2 decades or so, things are more on the e-commerce, e-trade. We have paperless things happening. Currencies, very few people are using cards, UPI, etc. And voucher is also equally important. And there was issue about the taxability of voucher. In the month of December, we have a detailed circular, and now there is an amendment in the law about the taxability of voucher, etc., and the time of supply thereof, and that is all positive side, the things have happened. Secondly, within the SEZ, because for the purpose of GST, this SEZ and FTWS is not part of India, means you are outside the tax bracket to that extent, and there were some transaction, it was happening between the 2 units of SEZ. And because of the no provisions in the statute, these different school of thoughts were there, and that made assessee to suffer. And here is a retrospective amendment coming up in favor of the assessee. So, you know, every coin has 2 sides, something good for the government, something good for the assessee. So on the both the sides. So these are the few cheers for the government, for the assessees. Of course, the few tear side is the reversal of the decisions, safari retreat. and then amendment to section 17(5)(d), the block credit. To what extent it is a reversal or no, that is a one part of it. Whether it is tier or still there is a long fight to go, time will tell us. There is an additional condition you need to fulfill whenever you are reducing your output liability by issuing credit notes. That is, obligation is casted upon you. The only thing is that, can the government cast upon a responsibility which is beyond your reach, beyond your control? That is a kind of a issue. I cannot control my customers and suppliers. So whether that is possible. So this is one amendment. Let us see how it will be implemented, because portal should give me enough details and data. Then only I will have access to the customers and the suppliers. And the third is, as regarding the pre-deposit, I don't think it is much of to tier. On the contrary, as and when in the old law, like excise and service tax, when you are contesting against any order, if going in for first appeal or tribunal, even if the matter is pertaining to the penal provisions, only penalty, there was a provision of pre-deposit. Somehow, for a reason best known to the government, there was no pre-deposit whenever you are contesting in the GST against the OIO containing only the penal provisions. Okay. And it was either it was scot-free, intentional, unintentional, God knows. And now it has been proposed even for those pre-deposit, you will be required for the penalty litigation of only penalty amount. Then also you will require to have pre-deposit. This is nothing but bringing the things in line with these old days of service tax and GST. We enjoyed good time for 8 years, but in time to come there will be liquidity issue to that extent. So with this, we'll take one by one provisions of the amendment. I have taken the amendments in the order in which they are being made applicable rather. So this is the first. This will come into force from 1st of April 25. That is of ISD. Friend, the ISD is concerned is going to be a big challenge in the time to come for the industry to implement. GST, we say one nation, one tax. To that extent, it's fine. But if you look at this, it is actually not happening, because your state provisions and the procedures is always not at par. That is one part. Secondly, you are one pace, but you are being treated as a distinct entity. And nowadays, the businesses are concerned, it is without walls. So there are many assets having multiple branches. And for whatever reason, their business requires that everything is accounting is centralized, billing is centralized, and then distribution chain is concerned, it has to pass through the ISD mechanism. Now, many a time loosely we are using the word ISD versus cross charge and all. Friend, there is nothing called cross charge. This term is not at all defined in the GST statute, neither it was there in the old service tax regime. It is only a transaction between two entities of a same companies, two branches, because they are treated as a separate entity since they are located in two different states, and there is a transaction of supply between these two. That is a transaction which is taxable. We loosely use that as a cross charge. Okay. And since the ISD concept was not mandatory, ISD concept is there in the statute, but there is no cross charge in this thing. The assessees were following diversified practices for distributing the credit for on the same transaction. So few of the assessees used to distribute the credit, few of them used to charge it. Of course, result was same, but the mode and the roads were different to that extent. Government has liberally come out with a circular saying that whatever you have followed is fine, because there is no misuse of tax. But that cannot go long, because there is a possibility that there can be a tax leakages intentionally, unintentionally possible. And therefore they came out with the notification, and now thereby input service distributor is concerned will be mandatory from 1st of April 25. So you will not able to use this so-called cross charge with ISD loosely. You have to find out. Now one very important point which was missed out in the definition of ISD was the ISD. If you look at the definition, I will not be reading the definition. The left side is the old definition, the right side is the one which is proposed to be amended from 1st of April. And the words which are marked in the red color are always the keyword in my presentation, plus those are the one which is inserted. Now there may be a possibility that ISD will distribute the credit which is charged by some of the vendor on forward charge, some of the transaction on which the tax is paid under reverse charge. You know, under CGST there is a 9394 section through which you need to pay the tax under reverse charge. There is a one more reverse charge which is through IGST, which you have to pay, that is through section 53 and 54 of IGST Act. That was missed out by the reason best known to the government. So therefore, technically there was no intention on the part of the government to discourage or rather restrict the credit, but because of the wordings of the definition, this was not finding the place, and which has been rectified by inserting, and therefore you see that on the right hand side there is a red word of this act or under section 5.3 and 5.4 of IGST. That means if your office is located in Mumbai and which is a ISD, that ISD will be distributing the credit on three fund. One is the vendor who has charged the tax to them, that is GST on forward charge. Secondly, there is a vendor or that tax liability these ISD is supposed to pay under reverse charge but local tax, that is CGSG, intrastate. And there may be a transaction of interstate transaction on a purchase where tax is payable under reverse charge, that is now been covered. So this is one of the amendment, and it's a welcome provision. It will avoid a lot of complications and litigation which was unintended otherwise also. So timely rectification happen. Correspondingly, section 20 of the GST Act is also amended to make a provision for distribution of this credit. So both these amendments will go hand in glove. This is absolutely beneficial and much needed, and prevented lot of litigation which would have happened in the time to come. So the credit you will be eligible in the time to come. The next is about the vouchers. The voucher has a big issue since the day one when GST has come, because the voucher is come that there is nothing. Also this term is being defined for the purpose of GST, that is fine. But you know, nowadays there are various types of vouchers are there. It is the businessmen who decide what is the vouchers, what is the benefit involved, what is the service or goods embedded wherein. And based on that, the taxability used to arise, but there was a section 12 subclause 3 and subclause 4 which decides the time of supply of voucher. Voucher may have embedded goods within that, they may have service within them, or maybe combination of both also is there. Now in that process, the different school of thoughts were there, and it was causing hardship to the assessee, and departmental officer used to interpret, because multiple, see this is a law, you sit on which side of the table, your interpretation may change, there is nothing wrong. And as on today we don't have a precedent to that extent. And therefore there was much needed amendment which was expected in the voucher. So let us go in detail in the voucher part is concerned. First of all, try to understand what is meant by voucher for the purpose of GST. See, in your business transaction, you may have intended issued the voucher, you know vouchers, Akbar Ali, Lifestyle, DMart, there are a lot of vouchers are there, okay. But for the purpose of GST, what is expected, or rather what is meant by voucher for GST is defined. And very importantly, it is an instrument where there is an obligation. Most important, voucher should contain obligation to accept it as a consideration or part of consideration. So if I have to say in a layman's language, voucher is nothing but a currency which is valid only in that shop. See, like the shop, say Lifestyle issuing the voucher, so you can redeem it as if you are redeeming your rupee in any of the Lifestyle branches as mentioned in the voucher. This is in nutshell for a common man understanding. If the document fulfill this consideration, then only it is voucher for the purpose of GST. You may have any other voucher, but that may not fulfill this condition. I'll give that examples also. Now, just because name is voucher, you cannot treat and decide time of supply, taxability, exemption based on your terminology. That's a layman's language. The legal language definition will go in this fashion of the voucher. Now, because of this ambiguity, therefore the matter has went to the courts, and one of the decision is Madras High Court. This is very interesting, because based on that decision only there was a circular. Based on that circular, now there is an amendment. So this is a preface for that. How this amendment? I told you that the budget of late which we have seen, perhaps especially under GST in the era, in last 6 or 7 years, what all budgets are by and large either based on the decisions coming up on an issue of the courts, or the clarification sought by the industry. Based on that, circular is issued and the matter is debated in the council. These are the only point. Rarely, unless and until these kind of thing, rarely you will find budget proposal comes up. Okay. So first here, this case was in the case of Kalyan Jewelers case. Okay, and it is a Madras High Court. I have given the citation over there. This presentation I have given to WRC, and they will be circulating, and it will be uploaded on the site, I have been told. So no need to write it down, you will get it from them. Now here, Honorable Madras High Court has held that gift voucher or gift card satisfy the condition of actionable claim within the meaning of section 3 of TOPA 1882, that is Transfer of Property Act, and are as such not liable to tax by themselves. Only the underlying transactions are taxable. See, judgment is long. I have taken the crux of the judgment and the important portion. So more important, the vouchers which was underlying and which was involved in this particular court petition, court says it is actionable claim as per TOPA, and actionable claim itself is neither goods nor service because of the definition which excludes both these things, and therefore this is outside the purview of GST. Now try to understand with example. Suppose A and company issues you the voucher. Okay, whatever transaction I have seen or understood, that example I am giving. If something more left out, you can very well draw my attention and we will able to. But more important, every voucher is not actionable claim. See, suppose I am A and company and I issue you a voucher, say for 100 rupees. Okay, and voucher will have say expiry period of 1 year. And I took a obligation that this voucher you can redeem in any of my stores for purchase of any goods or services whatever I am dealing into, and that is, so it is like a currency valid in my particular stores or maybe some other store which is affiliated to me and with a time limit. That is, if this is the nature of the voucher, this is fitting into the definition of voucher under the GST Act because it is my obligation. I am obliged to do it. Like you are carrying 100 rupees note, that much is the obligation of government of India. To that extent, you can exchange and for procuring good service or discharge any of liability in this country. Okay, so that is what obligation of the government. This is a voucher is the obligation of that particular company, and you can redeem it. Okay, beyond within that time and the other condition. Now there is other type of voucher. Now suppose just I am running a resort or say a hotel, take any such kind of service or goods or say trading shops etc. Where I issue you a voucher, this is a voucher say for 3000 rupees and I tell you with this 3000 our resort will give you one night. Now suppose I have got 10 branches of my resort, you can get to any of my resorts of this thing and you can stay there for one night, you need not have to pay. You pay me 3000 now and then this is a voucher. You are not concerned with the pricing, how much is the prevailing rate, because once I have written in the voucher, it is valid for 1 year, for one night. My all those 10, 15, whatever resorts I have, there you can encash it. This is one way. Secondly, suppose I am dealing in ready-made garments, okay, and suppose it is only a shirtings, all shirts are there. Now in that I say, give me 1,000 rupees, here is a voucher, you can buy any shirt from any of my this thing, one shirt you will get for against this voucher. Now irrespective of the price, this kind of thing if I give, and there may be, both these voucher example will not fit into the definition of this voucher of GST. If you are dealing with these kind of voucher, then this provision is not relevant, this particular decision is not relevant, because what happened, this is not obligation but it is an advance payment. Because I told you that this is not redeemable. Redeem in the sense, I have assured you, you get one shirt, or I have assured you, you will get one night in my resort. Okay, so that means it is a price which I have agreed and you have paid to me. Now my obligation is to give you one night. You will not able to redeem against any other. Suppose in that resort there is a restaurant and you eat some food. This is not valid there because I have told you I will give you one night. Suppose in my resort, that particular department store, I have pant, I have leather belt, etc. I will not give you because I said I will give you one shirt. I hope you are getting what I am trying to say. So when there is specific voucher, specific items, conditions are there, and that is not redeemable. Redeemable means what? Redemption is always as a consideration. Now go back to the this thing. Obligation to treat this as a consideration. I am not accepting as a consideration. I am giving you a value. In the sense, I am giving you some service or some goods in turn of that. Then this voucher will not fit into the definition of that, and it will be 100% advance. This particular Kalyan jeweler is not dealing with this voucher. It deals with a voucher which is redeemable, like lifestyle voucher of 1000. You can go and encash, you can buy anything over there and you use that as a currency. It is only that voucher is being dealt with in this Kalyan jeweler's case of Madras High Court. I hope it's clear on this. So every voucher, this provision will not come into play. And secondly, only this voucher is defined for the GST purpose only first type. This is the only voucher. The rest is not a voucher at all. It doesn't fit into the definition of voucher under the GST. You may call it as a voucher for layman language, but not for GST. Okay. Now what high courts have further stated, the gift voucher is for a specified item. See, now what I stated is high court has observed is for specified item of jewelry of specified value. Tax is payable at the time of issuance, because here what will happen in Kalyan Jeweler, you pay, I don't know the amount, I have not read down. Suppose you pay 10,000 rupees. They have assured you will able to take one ring. Okay. So that means with 10,000, no, if you don't buy ring, this voucher will remain with you. If you take chain, they will not give you. Because that is what. So those kind of vouchers. And here the Honorable High Court has stated that that means if voucher is of this kind, then you need to pay tax there and there when the voucher is issued. Okay. And that is what time of supply. As there is a supply, transfer within the meaning of 7(1)(a), read with serial number 1C of schedule 2 of respective. Because if you read the definition of 7(1), supplied or agreed to supply. So when I say agreed to supply, when I issue voucher, I say I'll give you ring. That means I have agreed to supply. Then I cannot deny. That's why it is fitting into the definition. Okay. And that is the reason it has to be. Therefore, tax is payable under section 12 subclause 4A at the time of issuance of voucher. Further, the Honorable Court stated that if there is no supply in the sense when I give you 1,000 rupees and voucher and I tell you whatever you want, you come and spend it and redeem it. That time there was no assurance. I didn't told you buy, do this, you this. I have only obligation that I will accept this as a currency which can be redeemed. Now what you are going to buy, I don't know. You may buy service, you may buy goods, you can do anything with the means which is permitted as per the voucher. So there is no specific nexus of that kind of thing. So in that case it says that time of supply will get postponed to the actual time of redemption. So suppose my store is having service and goods both, okay, and you took 10,000 rupees voucher. So it can be goods, it can be, then they say that as and when you come for redemption, whatever supply happens, that tax you have to pay at that point of time, because this becomes currency. So on transfer of currency, there is no tax. Okay, that is what this is trying to say. So redemption of voucher on a future date of sale of merchandise or goods when such voucher is presented by the customer at the counter. Relevant paras of the decisions I have explained. Those who are interested can read it. Now based on this decision, since it is held by the court, which was not further challenged or rather to the Supreme Court, so it has become law of the land, and CBIC has come out with the circular absolutely on that line. See, decision came in 24 October and here is a circular in December 24. I have given the reference number and CBIC has used absolutely same language, saying that transaction in voucher themselves cannot be considered either as a supply of goods or service. Now what voucher? The voucher which is defined in GST. Okay. In case voucher is distributed, now in voucher is a big business. Nowadays lifestyle issuing voucher and they will hire some XYZ company for distributing voucher. So they will promote distributors, for that they will charge something. So if they are charging, that is a fee consideration. For them, that is not a voucher. It is not their obligation. It is somebody else's voucher. They are finding customer giving and they may be earning 1 to 5%, whatever it may be. Now that consideration is taxable because they are promoting voucher, selling voucher, etc. So there on the circular says GST is payable on such commission and fees concerned because it is somebody else's voucher. Further, it is clarified that GST is leviable on any additional services such as ad, co-branding, etc., etc. See, these are all obviously services, and if there is a consideration, then obviously that will be taxable. So this is self-explanatory, and no just GST and circular may I have rarely seen using the word appears to be payable. The government cannot say appears to be payable. They have to say either payable or not payable. This is not clarification. Appearing means if government says it appears, then as a consultant or a taxpayer, where we will go. But anyway, this language says that no GST appears to be payable on such amount attributable to non-redemption. That means most important is when I issue you the voucher with the timeline and the condition, and if you don't redeem, okay, then where is the supply? See, you may have forgotten, you may have lost the voucher or whatever, you have thrown out, whatever, but you are not redeemed. So, underline the voucher, good service or never supplied. So, that redemption money which comes, which money has already come to you and it becomes your income. Okay, that doesn't mean there is a tax liability on that. and this is what is called a no GST is payable. Their department was taking different stands at the ground level as well as at the first appeal. Tribunal we don't have, and this year and this circular has given relaxation, and many of those matters will settle down based on this, of course. So now the voucher is neither supply of goods, that circular further says, nor services based on this circular. Now more important, when it is neither goods nor service, why you want provision for time of supply? See, when it is neither supply, when there is no supply, why you want time of supply? So therefore there is no need for time of supply, and therefore they have omitted this section in this budget. So this is the amendment in the budget. They have omitted section 12 subclause 4 and 13.4. 12.4 for goods, 13.4 for services are deleted, proposed to be deleted. Obviously because it has no relevance now. That is the next amendment. Lot of litigation unnecessarily been. Next is about ITC, most important part of it. The next is about the ITC, the most important, let me tell you, of all the proposal provision which our Ketan Sahi sir during his remark he has stated that about ITC. I think you must have, all of you either read or heard about the Safari retreat decision. The last 2 or 3 months we are only discussing, and there are a series of seminars, discussion, such a huge long judgments, and every time you read you get different meaning. Fail to understand, it's very difficult, not that easy. Anyway, so this is about the clause. So first of all, let me try to explain what is this and what they are trying to do, and this is a retrospective amendment. Government should avoid retrospective amendment, and this exactly I remember in 2014 when this government, now 11 years they are in power, and they have said we will not come out with a retrospective amendment for famous Vodafone case. I think it was all political promise perhaps, because there are quite a few retrospective amendment in income tax. We have 148A, etc. And in GST also, this is one more. So retrospective amendment, if it is beneficial, we'll still know. These are all not beneficial. It is against the assessee. And indirect tax is concerned, you know, it's on a forefront. Income tax, you file once in a year return and you pay advance tax maximum 4 times. But GST every month you have to pay by 20. So monthly liability goes, exemption, refunds, etc. and it affects your costing. And possibly you may not be earning anything, still you have to pay GST. Income tax comes only after you earn. So GST, and many, you can see the collection more than 21 lakhs crores, almost a double than the income tax. Anyway, so way too much of the importance GST bears, and let me tell you honestly, if businessman comes to structuring, first he will ask about GST and then comes income tax, because it's a consumption tax, and if you cannot pass on the burden to customer, then you have to bear it at your own. And by and large, more than 95% of the item bears 12 and 18%, which is not kind of the margin many businesses are earning. So it's a very big challenge. Anyway, so we have one block credit concept is there in GST section 17. We are more concerned in this is 17.5, subclause 5, and there are 2 clauses, C and D. I have reproduced also, and the amendment is in 17.5D. So the provisions have been reproduced just for your this thing. The keywords here are concerned. In these, goods or service are both received by a person for a construction of immobile property. They have used the word construction of immobile property, and construction is defined to include repair, etc. everything. Fine. For the purpose of GST, its term is defined. Thereafter, in the bracket, they have highlighted other than plant or machinery. So, immobile property other than plant or machinery, that to them it will not be applicable. So, you have to find out what is plant and machinery, and that too also word is or. Either or. So, or means need not be both. It can be any one of these. That's one. And further this section clause says that on his own account. Now, what is meant by own account is not defined. Okay. But that is very important. Including when such goods service both are used in the course or furtherance of business. Now, this is falling under block grade. Okay. And for the purpose of this section 17, they have defined the word plant and machinery. Whereas in clause D, they have used plant or machinery. See, if you look at 17C, 5C, there it is and machinery. So you have 2 clauses just facing each other, C and D. C is using and, D is using or. So when the law is using it for almost 7 years, okay, that you cannot say it's a mistake. It was intentionally they have done it. You may commit mistake, but you don't come to know till 7 years. I don't think that is justifiable. Okay, but anyway, now definition is there and, that means government don't want to define or. Okay, and what is meant by plant, that is not defined. What is meant by machinery, that is not defined. So whenever it is together plant and machinery, that is only been defined. I hope it's clear to that extent. Okay, I am not going in the definition and all. Now what Supreme Court, based on these facts, the issue come up is based on the Safari Retreat about. The fact of the case Safari Retreat, you are aware that the mall was constructed, it was intended to give on rental basis from day one. So there is no intention to sell, okay. So he will construct the mall and give on rent. On rent he charges and pay tax because it is commercial premises. The argument there was that when my intention is to construct and use it, give it on rent on which I am paying GST, it is my output service. So on my input side, whatever input or input services I have used, that has direct nexus, and GST says that to why GST? GST is to eliminate cascading effect. Okay, so cascading, that's why I am eligible for the credit of these. The department never agrees. They say you constructed the mall, so it is immole property, and immole property is in a block credit. Matter gone to Orissa High Court. Orissa High Court is a very good judgment given by Orissa High Court. The Honorable Orissa High Court has stated that you look at the intention first of all, and secondly there is the chain. Otherwise there will be duplicate cascade. This person is concerned if he is selling the mall, okay, commercial property, he was eligible for credit. See, commercial property when you are selling, you are eligible for the credit, okay. And why not on renting? He should be getting it on renting in any case. Of course, in the commercial mall, after OC, if you sell to that extent, you will not be eligible because it becomes exempt service because of the definition, etc. It's a sale of immole property, etc. So the matter was the Honorable Orissa High Court has decided in favor of assessee. It was challenged in the Supreme Court, and now the observation of Supreme Court why this decision. Few important points rather I picked up. First of all, Honorable Supreme Court has held that clause 17.5D and clause 17.5C are both different. The very important thing, C and D are different. Second thing, there are two exceptions in clause D. Everything was about D only, because in this case of Orissa, either there was a goods or service or both, which was constructed for plant or machinery, and while argument was made by the council for the Safari, they argued on 2-3 accounts. One is own account and one is a functionality test, okay. And secondly, between or and there is a difference. These are the few points on which the arguments have happened. Now the Honorable Court, based on the argument, they said that these are two exceptions. There are two exceptions in clause D to the exclusion of ITC. Now what are those exceptions? In block credit, these are the two exceptions. What is that? The first exception is where goods or service or both are received by a taxable person to construct an immovable property consisting of plant or machinery. So plant and machinery is fine, but if it is plant or machinery, that is exception. That is one. And second is concerned where goods or service both are received by a taxable person for construction of an immobile property made on his own account. So if it is on own account, that is exception. These are the two exceptions which is carved out. Now own account is not been defined. So Honorable Supreme Court further go on to say that through the interpretation, and they are also given the precedent under the other statute decided in the different cases, construction is said to be on account. What is meant by own account? When it is made for is a personal use and not for service. So personal use means it is not for business. Now here in this case it is for business. So first. And second is more important. It is to be used by person constructing as a setting in which business is carried out. If business is carried out within that, it can be own use. See, like chartered accountant's office is there, any shop, any factory, where you construct it or buy it, whatever, we will talk about construction, then we carry on, then it is a own use. But if it is, in this case, what is happening? we have a property constructed and I am giving on rent. So where is my business in that? See, giving the property and doing business through in the property are two different things. So that is what Honorable Court has said. That's why it fit part into and it is falling into that exceptional case. This is what Honorable Supreme Court has observed and held to that extent. Further, however, construction cannot be said to be on a taxable person's own account if it is intended to be sold or given on lease, which is the case of Safari, which is given in lease and this thing. Fine. The explanation seeks to define expression plant and machinery, okay, using chapter 5 and 6 of the CGST Act, okay. So they say that what is defined is plant and machinery, not or. Now further it says that the expression plant and machine and plant or machine cannot be same. So because and or cannot have, and it is obvious, and means both will go together, or is always an option available, either of these two. Fine. The word plant, now thereby I can say only plant, I can say only machine, okay. The word plant is used in a bracket portion of section 75D, cannot be given the restricted meaning provided in the definition of plant and machinery. What is defined in plant and machinery? You cannot give that meaning to only plant, because they have used the word plant and machine, and here I am defining only plant, okay, which excludes land, building and other civil structure in the explanation, okay. Therefore, in a given case, a building can also be treated as a plant, which is excluded in the purview of exception carved out by the section 17(5)(d), as it will be covered by the expression plant or machinery, okay. So there can be your warehousing is there can be theatre is there. You have Anand Theatre cases there of Bangalore, that is vis-a-vis income tax, etc. So all those things the Honorable Supreme Court is trying to work out that it may fall under only plant, okay. Plant need not be the case from where you are producing something, goods. You can render service through him, that is also possible. Now warehousing is activity where you require warehouse for providing warehousing activity, otherwise how you will carry out warehouse. And if there is a hotel, if you don't have hotel, I will give you how accommodation service can be provided. I cannot provide accommodation services. So those are all things been highlighted in that. And therefore, the decision has came and it has given by way of a remand, not rejecting, but it is upheld and saying that under this particular circumstance and direction, the matter was remanded to High Court for computing, but by and large, they say that the ITC credit should have been eligible, rightly upheld by the Orissa. This has happened just a few months back. Now, we saw that immediately after that, there were headlines in the newspaper, government will file review petition, challenge it, etc., etc. And they say it was always intention of the government not to give credit for that. So we will discuss in council meeting. And in 55th council meeting, they have discussed and they say we'll give a amendment to this because we have never intended to give these decisions or rather credit of this ITC. And based on this discussion and amendment, now in the finance bill 2025, we have a retrospective amendment which is coming up. And that is what from 1st July 17. Try to understand 17, 18 has already become time barred, okay, in both the scene. 18, 19, not far away, 19, 20 also will become very soon to that extent. And this amendment is coming up. So if your case is not live, nothing is going to happen in 17, 18 for you at least to that extent. But anyway, that is a different issue due to time paucity. We may not go on that. But what is this? It is proposed to amend 17(5)(d). So now with this finance bill, 17(5)(d) is proposed to be amended, and whereby the words plant or machine is substituted by and. So now both will come in par. C and D, both the clause may or will go, it will be and machine, both the sides. So C and D will be at par. So first observation of Supreme Court that and or difference that is taken care of, okay, to that extent. The next is the explanation is also inserted at the end of the section, and which says that that was for clarifying that wherever there is a reference of plant or machinery given in this act shall always construed. Now when there is explanation, wherever we have written or, it has to be read as and. Okay, and that and is either notwithstanding anything is contrary contained in any judgment, decree or order of any court, tribunal, authority. This is specifically for the Supreme Court and all. Okay, so you have a double, I mean to say, they try to trap it ki this way or that way. बोलते हैं दूध का जला छाछ भी फूक के पीना है. Something of that kind has been happened. So these are they have amended or proposed to be amended in this bill. Now this amendment is based on the recommendation I told you. The question arises now in this case is, this amendment, whether it nullifies the effect of decision of Supreme Court, that is the first question. Second is, can a vested right accrued in favor of the assessee can be retrospectively reversed, because this amendment is coming in 25. Somebody has taken avail utilized credit in 17, 18, 19, 20. At that time the law was different. Now you say we are changing the law in this fashion. Where the right was vested, can it be done? That is going to be a challenge to that extent. Okay. Different school of thought will be there. Of course, you can understand the gravity of matter when it is going to the court, and that too also Supreme Court. I am giving with my best of ability, my view is concerned. You can independently always check and verify and get it this thing, because this matter is, those who are going to take ITC is again be ready for Supreme Court for sure. This matter is concerned. Okay. Now first is concerned, the very shocking thing which was noted in these cases, we have central law, we have state law, we have SGST and CGST. If you read the state law of Rajasthan, Jammu, Kashmir and Pondicherry state, there is a replica of this section, and there they have used the word and, not or. It was big shocking that we have so many states and one CGST act. The law is always at par because one nation, one tax, and most of the provisions are on the same line. But these three states, GST Act, when you read, we are not finding the word or. It is right from day one and. So, you cannot say center and state, one nation, one tax, center said or and this said A. And how can it be possible? But this was there for almost 7 years. Till today you can go and check it up. This is what the position is there. Even without amendment it is and there. Okay, that is one part. So, can you say it's a mistake? It can be mistake, accident, whatever. That now it is up to them to justify, and court has to decide to that extent. Okay. Secondly, if IT is already availed, claimed and utilized by somebody based on the provision which was untouched for almost 7-8 years. Okay. Can you reverse it and take it back from me by making retrospective amendment? Then where I will go? Because I already factored it. Okay, nobody took the objection. Of course, your case is live. Somebody, that's a different issue. But somebody, his case is not open. Now you will get a notice on that part. So to support of that one decision of Honorable Supreme Court in the case of Star India is there, which is reference I have given here. The Honorable Supreme Court in other cases, and we can draw the analogies, liability, this case was regarding the interest. You know, in GST and all the indirect taxes, interest is mandatory. There is no provision for waiver of interest unless some scheme comes. Otherwise, interest is mandatory. Okay. So, sorry. Under GST, you need not issue show cause notice also for recovering interest. There is a power straight away. With simple letter, they can recover the interest. Now, here, the liability to pay interest would only arise on default and is really in the nature of quasi punishment, because interest is compensatory and penalty is draconian. Okay, so penalty, that's why based upon your justification, bona fide belief, it may be levied, may not be levied, upper limit, lower limit, whatever. Interest, there is no choice, it has to be levied. Even if the learned officer is your dear brother, still he will have to levy the penalty because law doesn't give him flexibility to that extent. Okay, further, such a liability, although created retrospectively, in our case also it is retrospectively, could not entail the punishment of payment of interest with retrospective effect. The Honorable Supreme Court that you may collect tax retrospectively, that is within your powers, you can do it, with the government can. But therefore you cannot collect interest from me. Now, whether to what extent it will hold, because see, government has all the powers to make a law, amend the law, retrospective, all they can do it. So they have done it because the powers have been given to them through constitution. So here also it is possible. But can they recover interest? My liability is something which was not there, I have brought to notice today, and you are recovering 7-8 years interest, whatever. So that Honorable Supreme Court said that you can't do it. You need to have it. Of course, time will tell it, it need to be tested. And then the difficulty is there, somebody who is claimed, he has a big issue, whether he is qualified or not qualified. So that if you don't claim, matter ends. If you claim there is a sword hanging, matter goes to Supreme Court, coming back, again going, government amend the law. So is it a good and simple tax? the current government, while rolling out, our Prime Minister said it's a good and simple tax. Yes, maybe in his eyes, perhaps, but these kind of amendments, they gracefully accept it. If it is a mistake, the mistake. There is nothing of that kind. Why you want the ITC, etc.? You could have done it prospectively, gracefully. See, there are many such amendments have been happened, and which is gracefully. There could be some couple of thousands crore rupees would have gone, but public confidence would have been more on you rather doing it there. It's a discouragement. And secondly, indirect tax, it is you are entitled to recover from your customer. It is affecting your costing. I cannot go back to customer and collect the things now if my costing is affected, and I have not anything out of it. So this is what something perhaps is not good. But anyway, we can only, as a civilian or consultant or professional, we can represent the thing. Ultimately, king has to decide. But this is fairly not good to that extent. Okay, this is about the Safari ITC is concerned. Whatever limited I could understand, I could share on that part. We are at 6:40. We are around 20 minutes time. I have been asked to take you through to that extent. The next is about the credit notes. The credit notes relevant section is 34. There is an amendment to that extent is, it is proposed to substitute. The current provision is been substituted. There is a subclause 2 to section 34 of CGST which contain only one condition. They have added one more condition. This is very, very important because there are a lot of notices, disputes, orders only because of this, which now they have corrected it. Okay. First is, what is the provision? Provided that no reduction. Now what is credit note you are aware of? Credit note will be, see, if I have sold goods to Mr. A or service, whatever, and service cannot be returned, but the goods can be returned. Okay. So I will have to give him credit note either for goods return, there can be rate difference. Okay. There can be deficiency of service. For these reasons, I have been empowered by section 34 that I can issue him credit note, and to that extent my output liability will reduce. Say suppose I have charged 1000 rupees to you and 18% tax, 180 rupees. Say some portion of goods have come back, or suppose I have quoted you X amount and I charge Y amount, so overcharged you, or some services I have not provided and for that I have recovered this thing, so I will give you credit note. Then to that extent, whatever tax I have paid, next month I can reduce this thing. Okay. Now just try to understand, if I have charged you 180 rupees, assuming 18% tax on 1000 rupees, and you are eligible for ITC, you already avail ITC of 180 rupees, presume. After 2-3 months, within the time prescribed, I have issued you credit note. So my liability, assume 50% reduce. Say for 180, 90 rupees is reduced. So what happened now? The other person should reduce his ITC 90 rupees. Because government got 180 initially, so government given him 180 ITC, assume everything is complied. Later on I am reducing my liability because of credit note issued under section 34, assume everything is complied properly, so 90 rupees my liability I have reduced, adjusted against other liability, so government got 90 rupees less. So that 180 extra given, they should reduce the liability. Now that if it is not reduced, the government will giving credit out of pocket. I hope you are getting what I am saying. Correct, no? Now what is happening is, currently we have come across many show cause notice, department is issuing to us in the sense assessee, who has issued credit note, saying that okay, credit note is fine, you reduce liability is fine, but prove that other person has reduced the ITC. Okay, now you tell me, if assume a company having 100 crore turnover, or maybe something plus minus you take, and couple of credit notes with clients, and that also notice comes after 3 years, that client ka naam bhi nahi pata hai. See, after 3 years, whether he survives or not, God knows. Now I have to go and find out whether he has reduced. Now you tell me from how I will find out. Where is a mechanism available on the portal that you took that credit note? Even if you give me access to portal, it's a one figure of ITC. How I will know within that ITC which is mine? Okay. So law cannot ask me to perform something impossible. Okay. And if government cannot find out, how I will find out? We tell them, tum find out karo. Oh, nahi, humse nahi, aapko chahiye. Because you won't gain, you take pain. But what kind of pain? It is more than pregnancy pain. Okay. So that is the kind of things it is there. Now this clause is not there, which has been inserted now. Okay. Now what they are trying to do is, they said ITC as is attributable to such credit note. Take our example. Okay. If availed, that means 180 availed by my recipient, has not been reversed, if that is not been reversed by the recipient, where such recipient is a registered person. B2C में तो कुछ issue ही नहीं है, because ITC will not be there. B2B में, so I can reduce my output liability subject to condition you have reduced it. This condition was never there on the statute. Now they have brought on statute through this finance bill. Okay, so that is the first condition. The second condition was already there, that is written in black color. Incidence of tax on such supply has been passed on to any other person in other cases. That clause is already there, so we don't discuss on that. So I hope logically it is right. Okay, nothing wrong, because government cannot give you out of credit. But there is a mechanism, and if you make a mistake as a government to draft the law, everything blame comes on me, passing on the buck, suffering is mine, okay, for no reason, okay, and you don't provide me mechanism. Now why this is viable? You know, after January 1, 2022, section 16 subclause 2 is amended. Today we have a 6th clause in section 16.2 which you need to fulfill to make yourself eligible for ITC. Unless you fulfill all the 6 clauses, you will not be entitled for the ITC. One of the important clause that should appear in your 2B. That earlier it was 2A, now it is 2B. The big difference between 2A and 2B is 2A mein that person has only declared as outward supply appears. 2B mein he has paid also is shown. That is what they are envisaging. I am very poor on portal. I have never gone on portal, so I don't understand. But this is what my officers taught me. Ki 2B mein itna farak hai and 2 mein ye farak hai. I presume that is right. Okay. So 2B mein and that is what is appearing. I can see on portal. Okay. And my job is when I give the credit note, I will file in GSTR1. Okay. So in GSTR1, I am reducing my liability and turnover to that extent in that month, giving effect of ITC for some supply. The moment it is filed, it automatically reduces his ITC in 2B. So that means what happened for him, no, he cannot take ITC even if he want. Oh, deadlock ho jayega. It is auto-populated, okay. And if he try to dare to do it, there will be notice coming up. So that means government will come to know that this person is misusing, and I have done my job. I have shown in 1 and it is reflected in his 2B. That is what. Now thereafter if he doesn't refer or if government don't take any action, that it means I have deemed to have complied with this provision. Now this is possible only after January 22. For earlier period this is not possible because there is no 2B. And this provision is concerned, they have now inserted for earlier law, suppose your case is live. Now it becomes a very good case for us to argue if show cause or appeal is going on, that you said that law is never any say, this condition was never there. This condition is now introduced, something which is introduced from today, that means it was not there, then only you can introduce. So that will give you a good ground to defend and succeed if litigation is going on in any of your client's case on this ground. I hope it's clear. Okay. So now you can reduce, and this amendment from the date to be notified to that extent. Fine. The next is now the next is pre-deposit. Pre-deposit, I think in my opening remark I have stated it was a big pleasant shock. Sometimes you get shocked, but those shocks are good. So like in service tax or excise, you have cases going in for first appeal and tribunal where you used to make a pre-deposit. Those days it was 7.5% for first appeal, and second appeal additional 2.5%. This is about the service tax regime I am talking about. Now there, no, even if your case is of the penalty, okay, still you are supposed to pay the deposit. Somehow when the GST law came out, they have used the word this is only of the tax. So if your order is having tax plus interest plus penalty, your 10% whatever amount prescribed is always of tax. Now the government for whatever reason either missed or either intentionally, there is no pre-deposit but only penalty. So there is a suppose order for 122 penalty, 122 2A, 2B, whatever, okay. Only penalty, no dispute of tax, no nothing of interest. Then you can file appeal, no pre-deposit, okay. Which was in contrast to the earlier provision. So we were enjoying, okay, अच्छा है government, good government, तो vote भी देके आए हम लोग उनको, ठीक है. अभी now election हो गया, result come out, so now they have given a shock saying that भैया वो गलती नहीं था, वो आपका vote के लिए किया है, ठीक है ना. So now you pay the pre-deposit, that has been prescribed. So first is the amount is, even if it is only penalty, you need to pay 10%, it is brought at par with the tax. But whenever there is a tax interest penalty is available, you need to pay only on tax. Whenever it is interest plus penalty, you have to pay. Interest ka hoga hi nahi, but suppose you got it, if you are lucky, unlucky person, then interest there is no pre-deposit, because interest mein there is no need to go for litigation. Department straight can recover with the attach your bank account also. And for penalty, 10% you have to pay. Okay. Now these kind of provisions were there in the law, but that was only for e-way bill. And e-way bill may, when you make a violation, and this is what I have written in second bullet point, whenever there is a penalty order arising from proceeding of interception and detention of goods and conveyance, that happens in e-way bill. In transit, for example, e-way bill, pre-deposit was already there if you litigate, but that amount was 25%. So if you have only, see, you have paid the tax, everything is fine. Like it is going in your vehicle number is 1234 and you have written 1324. It's a mistake. Everything is fine. Tax bhara hai. So now what department will say? Do number bol nahi sakte because bill is there, tax is there. Vehicle number galat hai, levy penalty 100%. Now it's only penalty. So for that, if you are filing appeal, pay 25%. Okay. Now that 25 is reduced to 10. See, on one end 0 become 10. On the other end, that e-way bill mein 25 became 10. So now onwards, all penalty will be 10% from the date to be notified. I hope it's clear. Okay. This will be applicable even for tribunal appeal. So if you go from first appeal to second appeal, you have to pay another 10%. Of course, subject to upper cap, whatever is there, that upper cap will continue, which I have given. Okay. SEZ, this is Schedule 3. Schedule 3, you know, contains various items. We have 8 serial number as on today with sub clauses within that. They are neither goods nor service for the purpose of GST. Okay. Now, in clause 8, after 8A, they have added 8AA. Okay, and this is very important. You see the smallest of the mistake, oversight, mischief, whatever word you use it, or misdoubt, okay, it causes havoc. And see the kind of abatement comes up. See, if you ask you to draw a picture of animal which you have never seen in life, what will happen? You will not able to draw the picture because you have never seen that animal. So GST is also one of the animal. All the kind of the business transaction, the draftsman has never envisaged. अभी आजकल कितना टाइप का business कैसे कैसे business होता है, God knows. Okay, perhaps God also will find it difficult. So how the draftsman will able to? So that's how you will find maximum amendment lifetime will keep coming in GST. See, we belongs to postcard area. We used to write postcard to the client, अरे तुम्हारा advance tax due भर डालो. I am talking 1985, 83, 84. Okay. Now today where is postcard? My daughter doesn't know post office. Forget postcard. वो WhatsApp के भी ऊपर चला गया. Means something which I have never seen. So this is all evolving, no? So transaction gets evolved. Okay. So here also that is happening. Now one of the example is this. They have inserted. So amendment will come on the, because structuring of transactions will cause the amendment. To treat the supply, it is proposed to treat the supply of warehoused goods, it is only for goods, in SEZ or FTWZ, which will include that GIFT city, okay, to any person before clearance of export or supply to DTA as neither supply. Now what it trying to say? See, the law says that whenever if your unit is within that SEZ, etc., either we will go by goods only right now. Either you will export the goods to outside India or you will sell in India. वो goods का और क्या करेगा? बराबर ना? You are doing business over there. So that is taken care of. If you are giving outside India, no problem. If you are selling in India, there will be IGST will be recovered by the government because it's like a customs. They are collecting IGST. Now nobody has envisaged within the SEZ you sell from one SEZ to another SEZ. तो क्या करेंगे? See, in the SEZ there may be 2 units or there may be 2 SEZ. From A SEZ you sell it to B SEZ. So that is not there. It is neither good. Then they say pay tax. The officer say किधर लिखा है? It is not going outside India. It is not going in DTA. This is third category. If you say male का ticket इतना, female का इतना, third category किधर है? Okay. So here is a third. They say so that was never. Now here buyer is SEZ. So SEZ is not India for tax. So there when the goods are going out and out, Bharat, it is not export because still it is within SEZ. So that is said that it is neither goods nor service. So that is what is the amendment coming. You know that sale in transit during the course of the import. Now without entering into custom barriers in India, that was also amended in Schedule 8 in past and department because there was who will pay tax was a big challenge. So that is what is possibility, and there are dispute on this. So now it has been said, and this is retrospectively it will come up. So that is very, very important, this thing. And I said no, some retrospective amendments are welcome. They will resolve the dispute. Some welcome, like Safari is definitely welcome for government, not for us. Okay. So it is proposed, the most important, on these transactions, suppose government issued notice and somebody has paid the tax, there is no refund. So either you have paid voluntary for buying piece or jabardasti attach karke le liya, there is no refund. I personally feel this is not in a spirit of the law. In past also we have seen in Finance Act, in the service tax regime, if you have paid such, there are on many occasions they have given refund. Just think of kitne assessees रहेंगे पूरे इंडिया में. How many assessees have done this kind of this thing? Maybe 5,000, 10,000. So why you are taking a bad name? और कितना amount हो जाएगा? And this is genuine. You believe it is not liable, then why you don't to give it? And prescribe some time limit. Earlier they used to give 6 months time limit from the pass of the act. If you refer 2014, 15, 16, those days, service tax mein these kind of things have happened. And government. But anyway, hope sense will prevail. When the bill become act, we need to do the representation to that extent. Going forward will be good. Track and trace mechanism, I will not speak much on this. This is applicable only for a specified product. They have already notified for 148A, tobacco products, cigarettes and all those things. They presume that this requires a checks. A lot of transactions are going scot-free, where the government, there is a leakage. It may not affect common man. Of course, smokers, that is different thing, but the dealers, very few dealers are affected. So there is a special provision they have made, and there are some duties being casted upon them. So I will not go by this thing. You can read. This is only procedural part applicable to limited this thing. And there is a penalty also being prescribed if you violate those conditions. Okay. The next is about the local authority. This perhaps maybe 5 minutes, sir, I can have it. Yeah. So local authority, there is a definition. 2 subclause 69, very interesting, and this is also based on circular. This amendment has come, this definition is amended. So first let us understand why this amendment is required. The definition has clauses up to G, our part is C. C is important where the amendment has come, so let us focus on C. Now local authority means a municipal committee, Jilla Parishad, district board or any other authority legally entitled to or entrusted by central government or state government. Thereafter important one starts. With the control or management of, and then municipal or local fund. If I ask you, if you are reading this way, municipal or local fund, you agree that it include municipal fund? I am asking you the word written municipal or local fund. If it is written this way currently, whether this include municipal fund? So government don't want litigation and the misunderstanding. You may say yes, there may be some school of thought, some lawyer will argue and Supreme Court they may succeed. Fund kyun nahi likha hai? Okay, so that is now amended. They have amended municipal ke baad fund likha. Municipal or local fund nahi, municipal fund. And this is very, very important. For the reason that it is now proposed to amend, which I have written, municipal fund or local fund. Oh, word fund add kiya. Okay, and why? And they have defined both the terms also. Because municipal, there is no definition of municipal. Either it will be municipality or municipal fund, but there is no municipal. That's now inserted definition of municipal, local fund they have defined, which I have reproduced here. And more important, it has a relevance, and that is a circular of January 28, just 3 days before budget. On 28th January, we got this thing, and this circular is based on the representation in seeking clarification by the business authority from the CBIC, where it has been clarified that in Delhi, there is an authority called Delhi Development Authority, okay, is not local authority. It is not local authority, that is clarified by CBIC. Under GST law, it is not local authority. Under GST, there may be for their local purpose, municipal purpose, that is okay, but not. It is not fitting. Why? Hence, the service, because the word fund is not, hence, the service provided by DDA to business entity will not be liable for payment under RCM. You know, whenever you are making payment to government or local authority, the business entity has to make the payment of tax under RCM subject to whatever exemptions. Okay. Now such kind of payment has gone to the municipal. They say fund kidhar hai? Local authority किधर है? Will not pay tax. They seek a clarification and CBI से नहीं लगेगा reverse charge because of the wordings of this thing, definition. So now to overcome that, just 3 days before circular has come, okay, now they say now it is fund. So now it will fit into the definition of local authority, and after this amendment, their reverse charge will be applicable, okay, to specifically. With this amendment, the service provided by self-governing body as municipal committee to the business entity will be liable for GST. So this is a major amendment coming up. Of course, in Mumbai we don't have such, but across India there may be many. DDA is the one which has sought the clarification. Well, friends, I tried my best within the time available to deal with few important provisions. There are some of the provisions which I thought may not be very, very relevant, so I didn't. If time permits, and on the topic, if anything is there, I don't mind. It's a decorum of this thing. Thank you very much to the organizer and each one of you for giving me an opportunity for being and for a patience hearing. Thank you. Yes, sir. See, the problem is you are thinking logically is fine, sir. I told you before taking up this topic is I read it for 5 times. Every time it gives the different meaning. And let me tell you, still I am not very sure what I am interpreting is correct or not. The decision is very lengthy and very difficult to catch this thing. First is plant and machinery is defined in the law. So once it's defined, you have no choice but to adhere to it. And the what court say or is not defined. And they have used the word in C and D clause. Okay. So when you are using shirt and pant, shirt or pant, don't you think? So I'll tell you as a memento you will get shirt and pant. And next day I say shirt or pant. Is there a difference between these two? Yes. So the same thing Supreme Court says, and or is not same. Okay. And government by his wisdom has not defined. So government was not intending on this thing. So that means both are independent, and or nor. Then when it comes to or, plant is separate, machine is separate. There plant and machinery will go together. So what then I have to say whether I fit into plant or whether I fit in machinery. I may not fit into both, but I will fit in anyone. If I fit in anyone, I will go out of exclusion. And plant doesn't mean, they say, as held in various decisions, its citations have been given. Anand Theatre is one of the decisions in that case, where, see, plant doesn't mean, Supreme Court says that it should be used for production. It can be used for rendering service. Your warehouse can be plant. Cold storage is a plant. Cold storage. Theatre is a plant, because theatre cannot be used for giving lectures. It is only for movie. See, like that, it's a particular, only specific purpose it is there, no? So it is a plant. So that example they are saying, so I am plant, but I am not machinery. And that is how this has come up. Yeah. Yeah, actually, there is absolutely no amendment to that, and there is no doubt or dilemma, at least I have on that part. But if any issue we can ask, financial credit has no relevance in GST, first of all, sir. If you read section 34, see, GST is not concerned with your P&L balance sheet. GST is concerned with supply kiya hai kya. If it is supply, you pay tax or no, okay? And if you reduce the tax, whether that reduction is correct or no. So credit note they have given, they have defined credit note under 34. And it's only 2 situations has been envisaged. In credit note, for goods, no, there can be a rate difference or there can be quantity difference. Goods ka credit note और कुछ दे ही नहीं सकते. You cannot give. Quality. That is, quality is definitely you can connect with rate. That's one. And on services, deficiency of service. So suppose I do some AC maintenance service for your office, okay, and I assume that I'll charge you 1,20,000 rupees per year. You may have 10, 20, 50 ACs, okay. That means tentatively work out, it is 30,000 per quarter. And I say that every quarter one service. Suppose this is our written contract, no dispute. One quarter my engineer bunked and it didn't came. Your AC is working, there is no damage. Everything is fine. You tell me you will pay me 1,20,000 or 90,000? 90,000. So one quarter I have not come. It was a contract. So there is a deficiency of service. So deficiency means I will give you credit note legally because going by contract. Now these are all valid. That is envisaged, timeline is given and material. Financial credit need is what? Suppose you are my debtor, you owe me 1 lakh rupees on account of goods and service and all. 5 other, we take chartered accountant. एक तो 4 साल के बाद बिल बनता है, 8 साल के बाद पैसा आता है, ठीक है? और वो 8 साल के बाद वो रोने को आता है कि भाई सर इतना ज़्यादा पैसा लगा है. तो virtually we are not entering saving bank interest also. Okay. Now in that you also think चलो 8 साल का एक साथ दे रहा है ना, कितना हो गया? 10 80 हज़ार ना, 75 हज़ार दे दो, settle. Okay. Now that 5,000 you will give credit note. We are just discussing. So that credit note में there is no deficiency of service. अरे on the contrary interest लेना चाहिए था, but ठीक है. So you are settled. So that is financial credit. You will not able to reverse GST liability. That is called financial credit. It will reduce your income, no doubt. But there is no reduction in supply on various accounts because there is no deficiency of service. Secondly, it has not met within the timeline. So on when credit note mein I am not reducing my liability, the government got full tax. So you need not reduce ITC. Correct no? And discount, you call it as a discount, okay, that is deemed a payment. So you are complied with that condition also. Provided you take a settlement letter from me that your 80,000 we have settled for 75,000. That is deemed payment. Yeah. Thank you very much. Thank you to each one of you.
Please hold on for 2 minutes for the respect of the speaker. I know we all are extremely busy and we have some or other engagement, but request you to please hold on for 5 minutes. I'll request Hansa Madam to propose a very well-deserved vote of thanks for today's program to respected Rajiv Bhai.
So as we wrap up our insightful program on significant recent changes in GST, I would like to take this opportunity to express my sincere gratitude to our speaker, CA Rajiv Luthia ji, who has provided us with in-depth analysis of the recent amendments in the GST framework. Sir, your changes that you had said in the form of cheers and tears, and even ITC, the Safari Retreat case study, and even section 107 and 112 and many more compliance requirements in a very simple way. So the knowledge and insights that you have shared with us today will undoubtedly help us adapt and seize the many more opportunities in our field. I would also like to thank our institute for organizing this session in such a short notice, and I wish all the participants also once again a very thank you for your engagement. One more announcement, there is a budget analysis book which is available outside at a very, very nominal rate with the recent amendments that Sir has spoken. So I would request you to kindly buy the same. Thank you so much. Have a wonderful evening.